Today is August the 3rd, and this is gonna be the first trend study that I'm gonna do for Bitcoin for the upcoming market. So my position right now is bullish. In our Discord channel, our position right now is bullish. We've been bullish since December, mid-December. But this is the first official Bitcoin trend analysis that I'm gonna do. But today I'm gonna go ahead and do some analysis, and we're gonna try to analyze the market based on different aspects. Okay, so we're gonna do a cycle analysis, and then I'm gonna show you how I do and how we're gonna study different levels. Okay, so the first thing we're gonna do, we're gonna start with a clean chart. This is probably this is usually how we start all analysis. The best way to start is to start with a clean chart, nothing in it. And we're gonna start with the monthly time frame, which is the biggest time frame that we use in order to make a Bitcoin trend analysis. And the first thing we see, the first thing that literally pops out is the fact that when it comes to a long term, if we consider this clear chart, we clearly have an uptrend, but it's gonna be on over a long term perspective. So we have on this chart we have data from 2011 all the way to today, 2023. The Bitcoin does not have enough data, just like a different type of market index like the S&P 500 or that kind of stuff. I will make a video about the S&P soon, and also a video about the Chinese economy market. And because these are big analyses that I think regardless of what type of market you are interested in, it would be interesting to have a clear perspective. So my analysis are, even though I have a bullish position, in this analysis I'm gonna make sure that we go over all the possibilities that we might face in the next coming year. So let's get into it. So like I said, on a long-term perspective, this is clearly an uptrend. Okay, on a monthly time frame, if you've been trading with me for a very long time, you know that this is where we start. And the first thing I'm gonna do is a cycle analysis. So I already had this thing here just to save some time. So these are from 2011 all the way to now. This is the bottom. This is what we consider as being the bottom of the last cryptocurrency bear market. So for now, what we're doing here is the first thing that we can see, and this is the most important thing, and that's probably how we did manage to start accumulating at December. So let me start by saying that our bullish position is purely regarding the cycle. If we consider the technical analysis argument that we're looking for in order to move and consider this as a full-blown bull trend, it's showing up a little bit, but in this analysis I'm gonna show you that we do have a lot of concern, and if this is supposed to be a bear continuation, this is something you also have to keep in mind, because if the bear takes over, if the bear takes over, it's gonna be pretty ugly. It is very important for you to have all the possibility of all kind of different scenarios that can happen in the market, what I'm supposed to do, like, so that you can have a better plan when it comes to what I'm supposed to do if we keep going up, down, or what if the market decide to stay sideways for the next for the next month. You can take a year. I've seen that before. So the first thing is the bears, they usually last 1 year, basically 12 months. So we did speculate. I have to say speculate, because when it comes to technical analysis, the reality is we start consider something as being significant when it happens as 3 times, when you have 3 events. So when we have trend lines, 3 reaction is a confirmation. The third reaction of any technical analysis pattern is basically a confirmation. So based on these two, bear, the 2013 and 2018, we did speculate here. It was speculation, but because when it comes to technical analysis reality, this was not enough to consider this to be like, okay, we're gonna have we have an average of 12 to 13 months of bear market in cryptocurrency, so we can just go ahead and start buying. So we did start accumulating, but very carefully. Okay, so we start buying at $15,000 Bitcoin, but very, very carefully, because we did understand that this position is still at a speculation level, because the trend is basically it is something that we base on the market cycle only. All right, so we don't really have even the investors that move on with fundamental analysis. There's not even enough fundamental. The only big fundamental that's coming is next year halving, and that's probably the only and the most bullish fundamental that we have in cryptocurrency right now. Everything else is basically speculation, projects, great ideas. Keep in mind that 90% of cryptocurrency fail. It's not just a cryptocurrency reality. In 2000, when we had the dot-com bubble, after the dot-com bubble, 10 years later, 90%, more than 90% of company that was fueling that bubble, they are not no more, so basically later on I'm gonna make there is another video that I'm working on it's about how to prepare a bear bottom, and because there is a video on this channel which I was recording a meeting that I have with a couple of friends. We were buying some very specific and very strategic stocks in 2020. So people who were in this meeting, they did quite pretty good until now, because we're still holding many of those positions that we bought in 2020. But so when it comes to this position right now, when it comes to the cycle of cryptocurrency, Bitcoin is in the bull. But when it comes to the technical analysis reality, so I'm gonna remove that. Okay, there's no need to remove that. So when it comes to the technical analysis reality, we are in a sideways market. Okay, so when it comes to cycle, cryptocurrency cycle, this is a definitive bull start. All right, but when you consider all the technical analysis event, all these mixed, there's a bunch of mixed signal, because we're not gonna go anywhere lower than the daily time frame. We're gonna stay between daily, weekly, and monthly. So because it's basically a trend analysis, so we're not gonna looking for entry point, that kind of stuff. We're just gonna start studying important level. So I'm gonna go ahead and place some monthly line. Some of those measured swing. This one, we can say this is a line. I put my monthly line on purple. I'm not gonna go over all the detail about how we place those lines and the specific colors. There's a 40-minute videos about how we do enter a time frame study in the channel. So we're gonna put the link somewhere here, and then so you can go ahead and go over it so you can follow what we're doing, kind of understand it. So this is probably the first line. I'm gonna put another line here, which is the highest monthly close that Bitcoin ever had, the highest monthly close on the last bull market. Okay, very important. And then after that, that will be the lowest swing somewhere here at $3,400 and something $1,000, $3,000 around that. That will be the bottom of the last bear market, so 2018 bear market. So we do have some other major swings, which is the $1,000 Bitcoin. So we're not gonna say it's impossible, but it's the probability of this happening is very extremely low. But if you've been a trader for a long time, if you've been an investor in it for a long time, you do know that everything is possible in the market. All right, so I'm gonna place that line, and then we're gonna make sure that these lines can be visible all the way down to the daily time frame. All right, okay. So this will be the extreme low. So when it comes to the monthly time frame, the monthly time frame literally gives us four zone. Okay, so we have the all-time high monthly close, we have the last bull market highest close around $1,300, 13,000, sorry. Then we have the last bear market bottom at 3,000, and then we have a top here at like $1,000. All right, so we're gonna keep it here. We're not gonna go anywhere lower than that. I don't think it's extreme. The odds of having Bitcoin at $200 is almost impossible for now. But we're gonna keep those levels so we can do inter time frame analysis, which is gonna be the base of our long-term projection and analysis for Bitcoin. So on a lower time frame, so these lines have been oh, there's one thing I wanted to show you on a monthly time frame is the RSI breakdown. So the RSI, I'm not gonna go into the detail about what that is and how it works, because once again we have a 1 hour class about that on the channel. So the first thing is, like I said, we did have two reaction at the bottom. So at the bottom of 2013 bear, somewhere here, correlate with that zone in the RSI. All right, and then after that we are at the bottom of 2018, and it correlates with this zone right there. Now remember, every time we have two reaction and then we are expecting a third, these expectation about the third reaction is a speculation, because if we do have a third reaction, that third reaction is a confirmation when it comes to technical analysis reality. In the RSI, it's a little bit different. Okay, it's a little bit different because here on the RSI, I'm gonna put this line for you. I'm gonna remove it. On the RSI right there, what we have is not just two reaction. What we have is actually three reaction, and this happened in 2020 during COVID-19. So we have three touch on the RSI. So that's probably one of the reasons why we have these are one of the few, even though they are few, they are very significant. They are very significant because of the fact that they happen on a big time frame. So when you consider the RSI only on a monthly time frame, this line that sits at the RSI 50 on a monthly time frame can be considered as a solid support when it comes to the trend. So whenever Bitcoin, the monthly RSI in Bitcoin reach 50 from the last bull market, we can expect some type of reaction, a swing of some kind. So the fact that this thing happened exactly somewhere around December, it is probably one of the most significant technical analysis prove that to support our bull, but they're coming over time. But the problem with the big time frames is by the time you have a confirmation in the monthly time frame, the price is already like all the way up or all the way down. So that's the reason why you have to make your trend analysis and then move it all the way down to daily time frame, so you can have a better view on how you're supposed to expose yourself, the risk management, all that kind of stuff. So at that level, between 43 and 50, we were expecting a movement. Now RSI, I've been using RSI for ages, and I know RSI is not a price thing. It's basically a relationship between supply and demand. And like I said, I went into all the details in the RSI class in this channel. So when we had that reaction, we find out this line. Now this line is not the most perfect line. Okay, this is a false line. So by false line, I mean this line is not completely there, but it's something that we keep an eye on. Okay, so if we had a clear tweet touch somewhere here, we will have considered this. So let me try to explain that. Let me get you a better view. Okay, so at that level right there, this is a bullish situation. All right, so we have one touch here, we have one reaction here, one here, and one here. So this third reaction on RSI is the confirmation that this zone between 40 and 50 how to be react whenever Bitcoin make it to that level on our RSI. And this is exactly what we have here, and this zone right there, this is exactly what we have here. All right, so what happened is that the fact that this happened exactly somewhere around December is one of the reasons why we love technical analysis. But then, like I said, this is basically two technical analysis reality that will say, okay, we are in that are actually bullish. So we have the cycle and two decent reaction on a big time frame that kind of support the argument that we might be in a bull market. So my position is 85% bull. We're gonna go over the 15% bull, and you're gonna 15%. We're gonna explain why we might think this might also be, if this thing decides to go down, it will go down heavily. So leave that here, and we're gonna go back. Let me remove this line. Okay, so we're gonna go down, and I'm gonna try to explain. So the way that I'm gonna show you, that's a line somewhere here. This line is right there. All right, and that can have this line here. So this could be, now the reason why this is not a proper analysis is because, once again, this line right there is something that some of our friends placed them, and I saw that in someone else's chart. I'm gonna put that in a purple, and I'm gonna remove this line pretty easily. So what you need to understand is that this line is also a false line. By false, I mean that it's not a proper uptrend line, but it is something that you need to keep in mind. And the reason why you need to keep in mind is because sometimes if you're gonna consider these as a line, so you have a first reaction here, one reaction here, and a third reaction here. Now this is not a touch, but this is what we could call in technical analysis an approach. It is still considerable. It's not a clear touch, it's an approach. So the reason why this is important is that we did go through this line pretty easily on the bear market. Now this is the reason why this zone is significant, and this is the reason why you need to pay attention to this, because we went through this. Let me try to. All right. So when we went through this line, exactly at $30,000. You probably know by now that $30,000 is extremely important, both on a fundamental, both as a fundamental reality, because it was somewhere around the price when Tesla bought $30,000. It was around $30,000 when they bought a bunch of Bitcoin in the bull market of 2020, 2021. $30,000 is significant, and every time we make it to that price, Bitcoin receives a serious blow from the bear. So it is very interesting that we went through this uptrend line exactly around $30,000, and that's the reason why this line is extremely important, because it was not a reaction, but we did have two touches and one approach. And then what we can expect is maybe Bitcoin will not make it there, maybe. And that's what I mean, that 15% probability of bear, because we are not anywhere close to that potential line, and the struggle is right there. We will need a lots of bullish power to push it all the way up to 60,000, which was the top of the last bull. So in the situation in which we're gonna have a bear movement, what's gonna happen is we're gonna go ahead and sit down somewhere here again. Okay, once we make it there, if this is gonna be a bear continuation, there is a probability that this thing becomes some kind of descending triangle followed by a major sell. All right, all the way to that level. But this probability to me is anywhere between 10 to 15%. All right, this is very possible. 10 to 15%. Even though the odds are small, like I like to say, even though the odds of something happening is small, if that thing happened to you, it's your entire portfolio. So you're gonna take the loss at 100%. So yes, it is worth it to buy, especially when you consider the cycle. When you consider the cycle, some of the technical analysis reality that we do have to place some buy orders, but this is not the moment to overexpose yourself. This is definitely not the moment, but you do have to have some decent position long right now. So this, like I said, is very possible, because the other possibility is that we might have another movement all the way, a continuation, and let me try to remove that so it's less messy. So we might have a movement like this. So this will be like some type of ABC type of correction, like massive ABC type correction. So like I said, the possibility of this to happen is anywhere between 10 to 15%. But if we were to continue on a bull movement, but we're gonna have a sell-off, so anytime we have a swing, a bottom of a bear market in cryptocurrency, it does not go straight up. We do have some sell-off, like anywhere between the bottom and the next in the next halving. I have a short that I've been working on that short for more than 10 years, and it's a bit messy, but I might show you that in a few minutes. All right, so the possibility of Bitcoin going straight up like this, so we are now talking about bullish scenario. The possibility of Bitcoin going straight like that without any reaction from the bear, I don't see this happen anytime soon. The $30,000 is being proudly defended by the bear. They will not give up that $30,000 easily for many reasons. You know, so I see this cross. They win this hands down. This zone right there was a reaction. All these technical analysis reality will be useful in the future, but I don't see the bull going through that stuff without any serious resistance, lots of volatility and all kind of stuff in the market. What I think that might happen is we might go down a little bit close to that zone and go up again, some kind of double bottom close to this zone right there. But when we go down on a daily time frame, we're gonna have more opportunity to see different kind of possibility, but they'll all fit into this. Okay, because like I said, it's just like it's a big picture, and then you go down a little bit, and then you're gonna have a different reality, but you're still gonna have to consider the big reality from the bigger time frame. This is what we call by inter time frame analysis. So this type of thing we're talking about things that might happen somewhere around 2024. So this is a long time. All right. So when we go down, all right, I'm gonna remove that line because this is not a type of line that we might be using in the next time, in the lower time frame. Now when you go on a daily time frame, things get a little bit different. So I'm gonna remove that line. So it's probably some kind of technical analysis. So we have so when we go in a lower time frame, we get all these purple line. Now we see those line on a daily time frame. We know that they are coming from a bigger time frame. So what we're gonna do, we're gonna try to reinforce these zones by using lines from different colors. So we're gonna use a white line so we can kind of delimitate, create zones, significant zones. This is the lowest, this is the highest zone. This is the highest weekly close from 2018. This is a close that I think it's also very important. So I'm gonna place that right there. You know, it is still a reality here too, but that's a different thing. I'll just put that here. Then we have a lowest close here too. And then now we start having some kind of, you know, what we call, I don't know if you were trading with me in 2000, like closer to the last bull market top, when we opened the big short on Litecoin. This is what we use to find those confluences. These are zones that we don't know what's gonna happen, but the thing is that these are zones that all the bulls or all the bears, they all get together and then they are waiting. They're gonna react at some point, right? They're gonna react. So when you consider this zone right there, there is a hidden spot here that it's not clear from a technical analysis perspective, because we know we need to reaction to consider a zone. But this zone in between $30,000 and that's like around $30,000, you know, 35, 25, somewhere in that zone. This is a zone that the bears, they literally place themselves, and it's not clear on a technical analysis. And then this is the thing now. This is what I was trying to explain, that the technical analysis realities that will support a bull, a full bull, they are showing up, but they're very shy. So we're not gonna try to force any kind of interpretation. We're not gonna try to force our expectation in the market. We just have to see the chart for what it is. But if we consider this chart right there, all the bullish signs that we had from the monthly time frame, it's like they just don't really show themselves here. So usually when you have a bullish reality on a bigger time frame, you go down on a lower time frame, and you start seeing all different patterns that kind of be like support this opinion of the bigger time frame, right? But the thing is that when you go on a weekly time frame right there, we basically cannot say this is clearly a bull trend, because here's the thing: even if we do have some kind of little correction here, these swings are more important in a daily time frame, and we're gonna see that. But when you consider that weekly time frame, the only swing that we have is this one. Let me try to show you bigger. Try to explain that so you can have an idea. Alright, closer look, right? So these are the swings that we had. These are the most important swings on the weekly time frame. All right, so so these are the most important swings we have. Okay, so we don't have anything to support the fact that we have a big swing from a weekly time frame, and we can just consider that we're gonna start considering higher high and higher lows, because in order to consider higher highs and higher lows, we have to have a set of highs and a set of lows, and usually it's anywhere between 3 to 6 of them. So that's the reason why we are expecting some movement like that. So in case this thing is supposed to be a bull development, we are expecting to go down somewhere here, all right, and have the first big swing on a weekly time frame and keep going up, or maybe not like that, or maybe some kind of ascending triangle that will eventually go on a break, something like that. So we can have possibly have this, consider this as a swing, and possibly consider this as another swing, and then we'll eventually have another one on the last Bitcoin all-time high. But like I said, where we are now right now, nothing is certain from a technical analysis perspective. All right, so we are bullish only because of the cycle. All right, so and the other thing is if we are to, because we do have to consider the bear scenario, we're not gonna blindly be like, okay, we're bullish and then that's it. If we're gonna have a bear, this is gonna be a catastrophic movement for most people. But if the bear gonna persist, so, and I'm gonna give you one condition, all right? If the bear gonna persist, so I'm just gonna do it right now. So I'm just gonna do it for so you can have an idea. I'm gonna place this Fibonacci level right there. Now, if this is supposed to be the first wave of the next crypto bull, this wave is not gonna retrace on itself 100%. So we're not gonna wait for that 100% to consider as a condition. We're gonna put that in between. So I have a spot. So we have the golden ratio at 61.80%, but I always put that line at 65%, And if we have a candle that close under that, this is what I'm gonna be like, okay, that 15% possibility of this to be a continuation of a bear market, I'm gonna start getting myself ready, get my tools ready to take advantage of it, because there is possibility of taking advantage of it, and I'm gonna try to explain. So we have a zone that sits somewhere between $21,000. So what I'm gonna do is that I'm gonna place a line here for you, $21,000. It's not gonna be a big one. It's somewhere here. All right, at 21 grand, and I'm gonna put that line as a green line, even though I placed the line on a weekly time frame. I'm gonna place the line. No, we're just gonna. Sorry, I'm gonna put the line at a white line. It's a white line. Okay, I'm gonna put it on white line. Try and make it fit between that. That's that thing that seems to be some reaction in here. And I put this line because I'm gonna use this line as a way to pay attention to what happened if we ever get close to that. Now, if this is gonna be a bear continuation, what we're gonna have is this. There is a very important, there's two zones that are very important right now. And if there's one thing you need to get from this video, moving on till the end of 2023, until the end of this year, is that on a crypto and a Bitcoin right now, this zone between $30,000 and $15,000 are extremely important. This is where the battles happen between the bulls and the bear. If the bears gonna win this one, they're gonna load their energy at $30,000 and shoot down here. But when we make it there, the bulls will certainly react. And that reaction might not make it to 30 grand. It might make it on that level right there. And this is gonna be the beginning. It's gonna be the beginning of a massive descending triangle. Once we cannot break that $21,000 anymore, all the short sellers is gonna load the market and short sell Bitcoin. See, that's the reason why we don't wanna play around under 21 grand, because it's not that the bulls gonna be like pull back, but they need to be able to regain $21,000 every time they bounce back from these level that sits between $16,000 and $14,000. So what I'm saying is that if the bears gonna use all the bearish energies that they have been accumulated between 27, 28, 29, all the way to $33,000, and they use all the bearish energy to launch an attack against the bull, this attack should not make it to $16,000 and stay too long. The bull should be able to react with the same, if not more powerful than the bear, to the point that they have to maintain the battle over $21,000. Now, if they fail and we start hanging out too long under 21 grand, you can be certain that the bear, all short sellers, they're gonna start keep loading their shorts again, and this will probably end up with a drop. And this is something we're gonna have to study closely if this happens. So the best case is that we bounce back somewhere around here and we create that swing, and eventually we keep going up. With that being said, when you see the weekly technical analysis, that portion of the market, when you just study it closely, you don't really have a clear direction. Like I said, the bullish position that we have is essentially because of the cycle. Now, I'm gonna go down on daily time frame and I already have a bunch of line ready for you guys. So this zone, I'm gonna remove that. Okay, so this zone between $21,000, and this is what we put this line, this straight line, it's white. This straight white line is the line that Bitcoin need to make sure, the bulls need to make sure that they defend that zone with everything they got. So I'm gonna go ahead and show you a little bit. So we are very close now. If I go down like that, this purple line that sits at $14,000, remember, was the lowest close on the monthly time frame. The $15,000 is the lowest close on the daily time frame, and that $16,000 is the lowest close on a weekly time frame. So between $14,000 and $16,000, this is what we call a confluence zone, and this is where all the bulls are lining up. People are buying at any level, but all the big buying orders, they are sitting somewhere here, right there. All right, so if the bears manage to push the price that low, what we need to have is a serious reaction from the bulls, and that will give us a candle that will signal a reversal. But even though this zone is extremely bullish, the most important price is $21,000 as of today. Whatever the bears do in the next coming year, in the next coming month, they must not be able to control that price. If they do, they will shift the odds of 15% bearish to up to 50%, 50-50. All right, anytime we are under that price, we are 50-50. We go over that price, we change the odds. All right, so why this is also important is, like, I know that Fibonacci traders, they will not hold. Now this type of no, this is one of the things, like I said, that makes technical analysis beautiful. Is so we use all these analysis and all these lines, and then we go all the way down to that level, and then the golden ratio is sitting right there. This 21,000 is sitting exactly in the middle between 61.8%, which is the golden ratio, and 65%. We have a bunch of reaction at that level. Okay, so we have been, the bulls have been reacting and the bears have been reacting kind of, we can say, at equal force at that level. But that $21,000 is the battle that the bulls need to win. So the $21,000 is very hot. We want the bulls to maintain that zone. If the bear managed to make it down to between 14,000 and 16,000, we want the bull to show them they cannot pass this zone. This is the closest the bull should allow the bears to make it. All right, they can play around, close under, get it back, stuff like that. Decent battle, that's what we're expecting that zone. But anywhere close to $30,000, if you already have a long position, you already have, I will say you should not increase the position, but it really depends on your exposition right now. If you've been buying at $15,000 just like we did, there's no reason to force. You're already 100%. So no need to force. We're just gonna wait. We're gonna be patient. We are expecting reaction. So on the RSI right now, what we got is a set of diversion on a daily time frame. Now this is one of the things that, instead of having more bullish presentations, we start having some bearish situation that we cannot ignore them. We've been diverging in a daily Bitcoin chart since April. It's a bearish diversion, a big one, daily time frame, big bearish diversion. The higher we go, you know, this one was about to cancel that reality, but it make it just right there, and then again another reaction. So this might not be the bear taking over again, but it's definitely the bear sending a message that $30,000 they are not ready to give it that early. Even if that $30,000 is not clearly present in all the reality, the big time frames, they just won't give it up that easy. So with that being said, this is the wave you have to pay attention to. How we do at $21,000 is extremely important. If we make it to 15, between 15 and 16, how we react at that level is extremely important. On a weekly time frame, that reality is basically the same. $30,000 is being defended by the bear properly, proudly, and then the only hope we have is this region right there. A nice and beautiful bullish confluence and a strong bullish defense between $15,000 and $16,000. But we do want them to maintain that zone. We don't want anything, any weekly candle. We don't want any weekly candle to open and close under $20,000, $21,000. If we want to stay bullish though, we don't want any weekly candle to open and close under $21,000. We don't want any monthly candle to open and close under $21,000. What we want is the battle between the bull and the bear to stay somewhere here, and eventually we want the bulls to maintain their position over that zone. That would be extremely bullish. So this is it for that. This is one of the longest video I've ever posted for more than 1 year, but this is extremely important because this analysis, it is something that I am personally gonna use as a base to move forward with my crypto the next highly possible crypto bull trend. Now I do have to make a small review on that chart. It's a very messy chart. That is because I've been using it since 2013, and all these lines have been there for over 10 years. Never removed them. That's the reason why it's so messy. But this is a chart that you need to pay attention to. Okay, I'm gonna post a couple of links where you can find them and kind of pay attention and read them for yourself, or just join the Discord channel. They're all there, and I'm not the only one posting too. So guys, that's it for today as your first and most important trend analysis for the next coming potential bull trend. The odds are still over 80% in my opinion, and for me, we're still in an accumulation time. All right, so if this was important for you, I do have some videos. If this was invaluable to you, I am expanding those trend analysis to, like I said, the Chinese market, and this is US stock market too, and I'm gonna make some analysis about those big indexes. And remember to subscribe and click the notification bell, so whenever these videos are ready, because they're long, you know, as you probably know by now, and so you don't miss them. All right, so take care guys, and I'll see you in the next video.